Good afternoon, Quasar Markets Live. I've got him, Kevin Green, Schwab Network. Kevin, Thursday, I beat my desk saying it's time to buy. Capitulation has happened. Markets are running pretty good. Are you seeing the same thing over there at Schwab Network?
Yeah, I mean, obviously, we are seeing a nice little rebound here. I'm not sure if we have the all clear signal, but I understand why you said, hey, pound the table. This might be an opportunity here because of the technical structure that took place. We violated that 20-week moving average for the S&P 500. Usually, the first violation of that, we don't usually see a flush the next week. And so a counter trend bounce to the upside could have been in the cards. I've been talking about it. You've been talking about it. A lot of people have been talking about it here. But I think what is going to be key is if we are able to reclaim the 50-day as well as the 20-day moving average. The 50-day moving average is going to be the first one. We're only like 10 points away from it right now. So that'll be the first area of resistance. Can we go back and hit the 20-day moving average as well? The last time that we did, early last week, we saw a swift and quick rejection to the downside here. But if we're able to reclaim both of those moving averages at the end of this week, I think it gives bulls a little bit more confidence that this could actually rip a little bit here, Stephen. The only other thing that I would be cautious about and keep your eye out on, counter trend rally to the upside. Could this be the start of the third wave lower, which we would make new lows? That's always a possibility.
Yeah.
And then could we also see a head and shoulders pattern also taking place as well? That could be a possibility. But for right now, given the seasonal environment, the dynamics that we have, the oversold nature of a lot of these markets, this bounce, and even tomorrow, if we do get a bounce, I don't think is out of the question, and something that a lot of traders and investors have been looking at.
Yeah, and it's interesting. The number 20, I've heard several people, and Jim Iorio in Chicago as well, also said the same thing. What is up with 20-day? Why is everybody in this 20-day market as opposed to the 30-day or the 10-day, the 5-day, the 100-day, the 50-day? Why 20-day?
Yeah, the 20-day kind of represents a full month of trading, right? 5 days in a month, or 5 days in a week times 4 weeks in a month, 20. So you get that 20-day moving average, roughly around the same thing as some people like to look at the 21 EMA. Is the EMA and SMA? There is differences, but in the grand scheme of things, if you're a swing trader, obviously at the end of the day, you want to be able to just see levels. If you're an intraday trader, it could have a little bit more of an impact. So that's really why the 20-day moving average is really of a focus here. And a lot of traders look at it. Here, you can look at any type of technical indicator, Stephen, and you know this. As long as enough people believe in it, it becomes stronger. And so why do we 200-day moving average? Well, that has been kind of the trend that a lot of individuals looked at, even though if you look back and you do cross correlation analysis, the 210 moving average, the 10-day moving average is actually the more precise one. That's what we utilize in the futures market. And the 20-week moving average kind of coincides with the 100-day moving average for the S&P 500. So when you're looking at the technical structure for the S&P, the weekly chart is starting to set up a little bit bearish. The setup was around 2 weeks ago that happened. I wrote about it.
Yeah.
But the violation of that 20-week moving average, usually the first time we test, you usually see a retracement week the following week. And so that's kind of what I've been looking at. Last six times that we violated or touched the 200 or the 20-week moving average, there's only been one time where we completely just failed. And that was around August of last year, if I'm not mistaken.
Yeah, good point. And look, I've heard over the last few weeks, Warren Buffett's old. He doesn't know anything about the markets. Yet he talks about bought Google, and Google's been up the last 4 days in a row, man. How about Google?
Yeah, look, the Mag 7 names, usually when they fall out of favor and everybody hates them, is usually when you want to keep your eye out on them. Everybody hated Google, in March of this year. They're way behind on the AI trade, this, that, and the other. Now look at them. They went from being not a major player within the artificial intelligence space to now being a major leader with their Gemini 3 AI model that's out there. And let me tell you, I mean, you got CEOs talking about it. Mark Benioff is making comments around it. You have Sam Altman sending internal emails, kind of maybe saying that we might be seeing a little bit of a challenge here. The CFO is talking about only single-digit revenue growth in 2026 for OpenAI. There's a lot of positive factors that are taking place. Google just signed a multi-year cloud agreement with NATO today as well. I mean, they have a lot of great things going for it. And it was trading at a discount compared to its peers. And so now it's starting to lead the way. But once you see these Mag 7 names kind of fall out of favor, don't forget about them. Everybody looks at the ones that are always making, that are making new all-time highs or trading near relatively all-time highs, and they always talk about that. But the ones that kind of fall out in the background, usually those are the ones that base and start to break to the upside. Apple's is another one that's been showing relative strength. Everybody hated Apple. Now Apple's doing a phenomenal job, and they don't have that much AI risk exposure when it comes to spend. So people are treating it as a safe haven area for now. And the last thing I will say is, not a recommendation, but kind of like what you're seeing with Meta. Meta is falling out of favor and trading at what? It was trading at $585 or so, right?
Yeah.
Look at the price action for Meta here today. I believe it closed at around $615, if I'm not mistaken, $613. Maybe that's another stock that's consolidating and trying to break higher than nobody's talking about.
Too. Yeah. All right. So let's get to it then. How about good old Netflix? I watched Stranger Things last night. Finished that up. Netflix popping here for the first time in a while. It had been a struggle bust their last. I have an hour chart up, daily chart now. I guess that stock was around 130, 140 before the split. I think everybody hated the split, and then now we're popping back up a little bit here. You like Netflix at all?
I mean, from a company standpoint, and if you're looking at the fundamentals, it's obviously a solid business, continues to grow, top line, margins. Anytime that there is any type of margin issues, they have the levers in place in order to expand margins, right? Especially when you're looking at the international markets. They usually have raised prices here in the United States and in the North American segment, but their growth because of Squid Games and all of these other Netflix originals, if you will, on the international stage is actually another lever for them anytime they do see some pressure. So I think the market obviously was paying a significant premium for that name. It's pulled back here a tad bit. I'm not sure what's going on with this Warner Brothers, Discovery, Skydance, situation. I'm going to be honest with you, Steven. I just want somebody to just get the deal done because we've been talking about it for the last year and a half, 2 years. And it's one of those stories that it's like, it's a nuisance. It's an annoying story, but it continues to just show up. Sounds like Netflix is out there putting a potential bid in for Warner Brothers.
And I think it would have happened last year had it not been. I think it would have happened last year if it wasn't for Lena Khan, right? I think that the FTC and the FCC and the SEC and everybody is a part of this thing. It doesn't care who gets bought, just get it done. I think you're totally right.
Yeah, and it's hard. This business, when you're looking at the streamers and even linear TV, it's a very tough business right now. Margins are very compressed. You have YouTube and content creators that are taking market share. I mean, I rarely watch. If I'm watching linear TV right now, it's football. That's pretty much it. And I know a lot of people are doing the same. I don't know how much this deal, if Netflix is able to purchase this company, is really going to improve their portfolio. You get a little bit nervous that they stop looking at organic growth and start implementing inorganic strategies, which just means that they start to acquire individuals or having, very big partnerships. I get a little bit concerned around that. And I think the market also did as well, which is probably why we saw that pullback. Because Netflix, actually, if you look at Netflix, it actually is a very low beta. It's probably the lowest beta of all of the, let's say, mega cap names. It's not a Mag 7 name technically, but it kind of trades on its own. And so even having that pullback, I think, is more of a signal of, okay, is this the right use of your capital? And do you really want this asset? Because it also comes with a decent amount of debt as well.
Yeah, and it's a shortened week, so talk to me a little bit about your thoughts on the shortened week. Got 2 more trading days here before the Thanksgiving, and then Friday. What do usually in the past it's been low volume, and Fridays have been a fun day almost always. It's always a up day. What are you thinking here for this shortened week?
Yeah, so there's a couple of dynamics I think is very important for us to kind of discuss. The first thing is the volatility index or the VIX last week, or if you're looking at vol, obviously we had an outsized move. It was almost a 2 standard deviation move on a 1-year time frame. Got very close, actually got to the upper end of that range before we started seeing a reversal, which is probably another thing that was on your radar for you to say, hey, maybe this is an opportunity to start to step in. I think a lot of traders, when they look at that VIX at 28 or they look at a 30 VIX or even a 40 VIX, they're trying to figure out what opportunity opportunities or what things in their portfolio to trim. And a lot of institutional investors are starting to actually deploy capital in that manner. That being the case, we also saw outsized volume last week and very low liquidity levels in the market. If you're looking at the E-mini S&P 500 book depth, which is what I follow as far as liquidity levels. What makes this week a little bit interesting is because you're right, low volume is going to take place. Usually it's also a low liquidity market as well, which makes it easier to push prices either higher or lower. So kind of comparing last week to this week, it's going to be a little bit different because of that outsized move that we had, the seasonality that we have for this week as well. I'm looking for at least another move to the upside, try to at least test that 20-day moving average. And then I think all bets are off there. I think that's where you actually see how the market really truly reacts. Is it a broad-based rally? Is it very concentrated? Is it more short covering events? You can look at that within the E-mini S&P 500 futures contracts. If we start seeing open interest contract or going lower as prices are moving higher, what does that mean? It's short covering rather than new longs getting into the market. That's the exploration that a lot of people and traders need to look at. I'm going to be looking at it this week and talking about it all this week. Traditionally, this should be a week that we move higher, but I'm also cognizant of the fact that we did see a bull trap, this time last week. On Thursday, especially, what was it? Wednesday? Yeah, Thursday. We had that bull trap. Understand that could still be the environment that we have, but I'm leaning a little bit more bullish than bearish when it comes to the S&P.
Right. I love that. I sold my Tesla today. Was I wrong?
Tesla? I don't know. I mean, what was the news? I'm going to be honest with you. I didn't follow the Tesla.
I think Elon said. I think he said that he can make semiconductor chips faster and better on his own than having to buy them from other places.
Oh, that's interesting. So yeah, okay. I mean, if that's the case, then it could catch a little bit of a bid here. I feel like if you're looking at the technical structure, though, Steven, it's in no man's land, and that's probably why you looked at it and said, okay. Are we re-ratcheting? Are we basically consolidating at a new level low and utilizing the previous area of support as now an area of resistance? And do we start seeing a stair step lower? That could be the case, but it probably does get a little bit interesting from a technical standpoint once it gets back to around this 320, 340-ish area. That could be a pretty decent area to lay up. And then you got to look at it too. I mean, it's getting close to new all-time highs or getting close to those all-time high levels. And in my opinion, institutions only have 5 weeks left to go. They're under the gun. They got to hit their benchmarks right now. Do you go to these mega cap names and try to get alpha, or do you look at other sectors, especially smaller sectors, and try to push prices in those areas? I think that's what is going to actually happen, where you see materials, you see utilities catching a pretty aggressive bid, very small sector. You can even look at industrials in some respects. I'm looking at Deere & Co. on Wednesday. I think that's going to be an interesting report. Could you put dollars elsewhere that have been consolidating and provide a better rate of return than maybe a stock that's trading near their all-time highs? You be the judge of that,
Yeah,
I'm not sure if you made a mistake or not, but it does look like it's trying to stair step lower here.
Yeah, I mean that's what I did. I bought a bunch of materials over the last few weeks. I thought the sector was pretty beaten up. I'll leave it one last one, probably a hard one, the best one. Fed obviously looks like they are going to cut. Bitcoin be pushed higher.
For now, I don't think the Bitcoin liquidation's over with yet.
Ooh.
So we'll see. I don't think it's over with yet, though. I think right now you have a little bit of a reprieve, and then we have that final flush. And I'm looking at, from a technical standpoint, 70,000 to 72,000. Look, we're going to get the cut. Everybody wants the cut. You got markets moving higher. Cool. We get the cut. Guess what? It's going to be it's going to be a hawkish cut. The commentary, I don't see any type of commentary coming from Chairman Powell. That's going to be very dovish for continuation in January if we're battling for 25 basis points in December. So I say, enjoy the environment that we have right now, but the concerns do not go away. The AI concerns, as far as some of these companies, has not gone away either, even after NVIDIA earnings. So take advantage of the window, but there's still some things on the horizon that could be very bumpy here. And I think Fed rate cuts expectations for January, I don't think the commentary is going to be great for the December meeting at all.
Be careful what you wish for, right? And that's been the word now on the street. Be careful what you wish for. Kevin Green, have a wonderful Thanksgiving, man. I know you're going to sit on the couch and do absolutely nothing and watch football, right?
That's right. Stephen, I appreciate you having me on. I hope everybody has a great Thanksgiving as well. Enjoy the time with your friends, family, or even by yourself. And we'll connect next week, right? Or maybe next week.
I'll see you next week on Monday, my man.
We'll connect. Yeah, we'll connect.
Thanks, Kevin. Appreciate it, man.
That's it.